In this video, I'm going to be showing you one of the best trading strategies to trade during London session. So if you're a London session trader, this video is for you. Make sure you watch this video to the end. What I'm going to be breaking down for you is going to be very important. This is a pattern. I'm going to be showing you patterns that repeat themselves on a daily basis, on a weekly basis, mostly on a weekly basis, right? Every single week that you can learn, master, and trade in order to make money and be consistently profitable when trading. Now, one thing to also note is that this pattern also happen and also play out during the New York session. So it's not only during the London session, it also plays out during the New York session, right? Not every time, but most of the times it's in the London session. That's what it's called. I call them London patterns. All right. So if you're new to the channel, I want you to know that, or if you're new to this video, this is a series. This is a video series. I've done part one, I've done part two. This is going to be part three, right? And in part one, I explained the first type of pattern. Now there are three main patterns, but there's also an extra four, which I've not really explained on my YouTube videos before. But I'm not going to be talking about that in this video. Just want you to know that it's the fourth pattern. But there are three main patterns, right? This fourth pattern is more of a variation of the third pattern. But there are three main patterns, and I explained in part one. I explained type one in part one. So make sure you watch this video. This is the thumbnail for the video. And I also explained type 2. This is the video, so make sure you go and watch it. If you check my playlist section on the YouTube, check the playlist section on my YouTube channel, you're going to see the videos there. This is going to be part 3. I'm going to be talking about part type 3. What exactly is type 3? Now, to show you a quick example of what type 1 looks like, I entered a trade just recently, just a few minutes ago on GBP I entered a trade here on GBP and the trade is actually going nicely. The trade is going nicely, right? So you can see we have the consolidation, we have the breakouts, we have our M formation at the highs up here. You can see your M formation here like this. If we change this to a line chart, you can clearly see that is it, right? And that is exactly this pattern that you see here today. So what I'm teaching you is actually something that works. It's something that I've been using to trade for the past. I learned it in 2020. 2021 around that area, right? But over the years, I've refined it to make it better, right? So this is the strategy. This is type one, right? And then if you're looking for an example of type two, just go to the reverse of GBP and go to Euro GBP. What do we have? Wow. We have a type 2 pattern here where you don't get the breakout, but you have the W formation at that low, right? So what does that look like? That is this one, but the inverse, right? So it's the W formation where you get the W formation here at the low like this, and then reverse. You don't really have the strong breakouts like you see here. So if you look at Euro GBP, you can see that is the pattern that you're seeing today. Simply buy somewhere in here and you're up in profits. London session, straight up, right? So you can see both patterns happen during London session because right now it's currently London session, right? So that's type 1 and type 2. Those are the examples of type 1 and type 2. Now, what exactly is type 3? I'm going to be breaking it down for you. What exactly type 3 is, how to trade it, how does it work, what does it look like, right? So let's get started. Before we get started, make sure you subscribe to the channel if you're not already subscribed. I see that most of you are not subscribed, so make sure you subscribe. Also, pay close attention, remove all distractions, turn off your phone notifications, pay close attention to this video. Make sure you study the video, study part 1, study part 2, study part 3. If you have any questions, let me know in the comments. You can also join my free Telegram community. The link will be in the description below. If you have any questions, you can reach out to me on Telegram and ask me any questions also on the comment section. So let's get started. What is exactly is type 3? What's the type 3 pattern? We're still dealing with the Asian session consolidation, right? So the way this one works, you're not really gonna get an M from you're not gonna get a breakout to the upside, and you're not gonna get this, obviously, because this is type 2. What exactly is type 3? Right? So type 3, the way it works is you have consolidation during the Asian session. Now, before I draw the consolidation, one thing that you need to note about the Asian session box, right, is this box gives you a lot of information. Right. This one box like this gives you a lot of information. For those of you that don't know, the box is the Asian session. Asian session lasts for about 8 to 10 hours. Right. So we box out the Asian session. That is the consolidation. Asian consolidation usually happens during the Asian session. So we box out the consolidation that happens during the Asian session. So it's the entire Asian session that we're boxing out. So from starts here to finish here is the entire Asian session, 8 to 10 hours. So, but one thing that you need to understand about the Asian session box is that this box can be broken down into two, right? You break this down into two from the highs to the lows here. This is the box. So broken down into two, right? So let me draw a line so we can see this is the, I think we can also use this one, right? So broken down into two parts. We have the upper part of the box and we have the lower part of the box. So let me see if I can just type it there so you can see did I say lower level? The lower level of the box. We have the lower level of the box here. And then we also have the upper level or higher level, whatever, upper level. So we have the upper level of the box and we have the lower level of the box, right? So now, whenever you see consolidation inside this box, there are three things that can happen. It's either price is just bouncing from the top and it's just going like this through the middle, or price is consolidating at the top part of the box, or price is consolidating at the lower part of the box. This is very important for you to know, all right? Which sometimes what you're gonna see is if price is consolidating at the lower point of the box, let's say price is consolidating at this lower level, you're gonna get a type 1, but the type 1 is not really gonna break out of this box, of the overall box. It might just break out of this lower level box like this and then give you the information. That's when it's gonna look like a type 2 and then it's gonna reverse, right? But if you carry this out, you're gonna see that it's the same pattern just repeating itself in different variations, right? So you need to understand most of these things. But now, when it comes to type 3, this is very important because the type 3 pattern deals with the middle section of the box, this middle part, this 50% part of the box. It deals with that. That's the most important part for the type 3. Now, the type 3 pattern, the way it works is you're going to have consolidation during the Asian session. And then coming into the London session, let's say market makers want to take the price down. What's going to happen is what you're going to see is they're going to hang around at this lower level of the box. And then coming to London session, you're gonna see price is gonna from this box here, it's gonna come all the way from this lower level, come all the way to the middle part of the box, and then reverse from there, right? It could reverse in two ways. It could give you a straight A top like this, or it could give you an M formation, a double top at the box. So these two patterns can show up at that middle line at the 50% of the range, right? But the most important is price is gonna reverse from this middle section of the box, coming from the bottom part. It's gonna come to this middle section. It's like a it's like a mini stop hunt. It's not a visible stop hunt. It's not something that you can easily see as a stop hunt, but it's actually a stop hunt because they're stop hunting these highs here, right? If you want to add liquidity and all those things, you might maybe draw some lines and say, okay, price is stop hunting now, blah blah blah. Right? But the most important thing is that price comes from the bottom of the range and goes to the middle of the range and bounces off of that middle of the range. So basically, the middle of the range is acting like support and resistance. So just imagine, remember, whenever you get consolidation, this is going to be resistance and this is going to be support, right? You all know the basic support and resistance, right? Basic stuff. So you know this is the top part of the box is resistance, the lower part of the box is support. What happens when you break the box into two? When you break it into two, you now have new support slash resistance. Sorry, resistance slash support. Right? This middle part is going to be resistance slash support because if price is above, then it is support. If price is below, then it is resistance. So in this example, price is below. So this middle part acts as resistance. So it's going to prevent price from going higher. Price is going to come to this area, bounce off of the area, bounce off of the 50% zone, and then it's going to reverse from there. Also, coming from the top part, let's do the top parts real quick. So let's say price is consolidating and consolidating, and then it starts to hang around these top parts. Then coming into London session, you're gonna get something like this, and then price is gonna reverse from there. Right? Price is gonna bounce off of this middle part of the box and then reverse away from there. Sometimes you might get a stop hunt, might go a bit lower and enter back in. Sometimes you might just tap it and reverse. You just need to understand that they're gonna give you different variations. They're not gonna give you the exact same thing every single time. Sometimes it might go below like this. Sometimes you might just tap it and then reverse. Sometimes it might come very close to it. Not tap it, come very close and then reverse from there. You just need to understand which type, which variation you like best and stick to it. All right. So this is the pattern. Sometimes, like I said, you might get a double bottom like this and the price is going to reverse. Sometimes also you can get an M formation like this and price is going to reverse from there. All right, so this is the type 3 pattern. It's more of a continuation pattern. It's something that you have to go with the trend. So if you don't know the direction of the trend, if you're going to be trading this, you're going to get stuck, because what's going to happen is, this is what's going to happen if you don't know the direction of the trend and if you don't know where to look for this, right? What's going to happen is, initially you're going to see this as a type 2, right? If you don't, let's say you don't know the direction, you don't know if it's an uptrend or it's a downtrend, and you're just trading off of the pattern alone without understanding that you don't just trade patterns alone. You have to add other things and other confluences and other background stuff that you see on the chart to make things make sense, right? But let's just say you're just trading only the pattern. You're not looking at the other things, right? You're gonna first of all see this M formation and say, okay, this is a type 2 pattern, and the price is gonna come here, bounce off of it, give you a type 3, and it's going to reverse. And it's going to hit your stop loss, right? So in order not to get stuck in that, you need to understand the direction of the trend. If this is an uptrend, yeah, taking these cells here, just know that there's a high probability that this thing could bounce off of this area and then continue back up, right? Well, there are also ways to go about it where you can just say, okay, I enter here, and then if I see that it's rejecting off of this place, I close the trade and then enter on this one, right? So that's the thing. So let me just show you guys let me show you guys a couple of examples of what I just explained, right? So I'm going to be showing you a couple of examples of the type 3 pattern. So make sure you pay close attention to this, all right? All right, so this is an example of the pattern, type 3 London pattern. So you can see here, let me grab my pen real quick. Right, so we can see here, we have the Asian session consolidation that happened in here, right? Where's the middle part of the range? This is the middle part of the range. This zone that I drew out here, that's the middle part of the range. We can see how price broke out initially. So this is a variation where price actually broke out of the box, right? Price broke out of the box, came back in, gave you a W formation at the middle of the range, gave you another W formation here, and then reversed all the way up. So you would be entering your trade inside here before they move away with this candle, right? You can see this is a shift candle. They shifted away from that area. So once price is done in this area, you should be already in the trade and then riding smooth to the top side, right? So let's move on to the next example. You see another beautiful example here. Here, first of all, you go to type 1 pattern that first showed up. So you have Asian session consolidation, you have the breakout, W formation, reverse, and then to continue on this trade, let's say you missed this first trade here. To continue on the trade, they gave you another opportunity to enter at the middle of the range here. Price came back down, bounced off of the range, gave you a W formation here, and then reversed all the way back up. So this level is acting like a zone of rejection or support or resistance, whatever you want to call it. All right. Here's another example. You see here we have the breakouts, then price comes back in to the middle of the range, spikes it. Now we have a liquidity hunt with this week. That week is a stop hunt above this level here, right? Also trying to tap this level here, right? And then price gives you an M formation, reverses away from that middle of the range. So we can see the M formation here like this, and then price reverses all the way back down. We have another example here. We can see this one even happened just recently. I think this is CAD CHF, right? This happened recently. I think yesterday. Yeah, this happened yesterday because this is today. This happened yesterday. All right, so you can see price broke to the downside first, went back up, came to the 50% of the range here, just tapped it, tapped the middle of the range. You enter on the sell, take this back down, all the way back down. Very simple and clear. Another example, this one happened today on EURJPY. Before recording this video, I saw it very clean. All right, so we have We have Asian session consolidation. You can see this is the middle part of the range, this line. That's the middle part of the range. You can see how price came from the top, came back down to the middle of the range, tapped the middle of the range, gave a little weak, threw a little weak, like a stop hunt at that range, and then reverse from there. You take a buy right here, take it back up, stop loss goes below. Very simple. You have another example here. We have this one happened today to CAD middle of the range, Asian session consolidation, middle of the range. You can see price came all the way back down here to the middle of the range here, and then we bounce from it. You take a buy here or here, take this back up. All right, very clean and smooth. Here we have another clean example. This one happened on USD card on Tuesday this week. So we have Asian session consolidation. We have the middle of the range. Price broke out, first of all. Now, this is an example where I told you that you might mistake this to be a type 2, and then you enter this on a type 2, and then price hangs around this middle of the range, and it actually gives you a type 3. They will actually give two entries. So we have the first entry here and the second entry here. All right. So what will make you filter out that confusion is understanding if you're looking for buys or sells. Basically having a bias. If you're looking for buys, then you stick to your buys, right? Even if they bounce from this area, it doesn't matter. You're sticking to your buys. If you're looking for sells, then what you're looking for is this, all right? So that's basically it. We have the W formation, and then we also have the M formation here, taking this back down, right? So if you're a scalper, you probably scalp this to here, scalp this back, maybe like to here, or if you want to hold it all the way back down, right? So I'm going to be doing a 12-week mentorship where I'm going to be explaining and teaching you how to master these patterns, how to accurately trade this pattern, the entries, the exits, how to manage your trades, where to put your stop loss, how to turn this into a system, turn this into an edge, turn this into a profitable trading strategy, right? Because I just showed you a pattern, but you can't just trade this pattern blindly or else you're going to wreck yourself. You need to understand the right place to trade this, the right time to trade this, the right areas to trade this, and how to actually even trade it to be consistent, right? And that's the main thing about trading, being consistently profitable as a Forex trader, right? So if you want to learn how to trade these patterns accurately, I want to create a trading strategy using these patterns, using these concepts, type 1, type 2, and type 3, and also maybe type 4. Make sure to join the 12-week mentorship program. We're launching 12th of May, next week, Monday. And if you want to join the mentorship, the link is going to be in the description below. So this is the page that it's going to take you to when you click the link in the description below. So when you first get in, you're going to get a couple of introduction videos that's going to give you a breakdown of the basic concept that you need to understand, like what is liquidity and stop hunts, how to identify liquidity, stop hunts, forms of liquidity, and all those stuff, how to set stop loss and take profits using liquidity. And then we're going to go over the 12 weeks once it launches. We're going to go over the different topics. You can see all the topics here that we're going to be going over. We're going to go to the points where we're going to discuss levels, trends, EMAs, how to use moving averages with those concepts, right? Because moving averages actually help with the strategy to make it more accurate for some of you that might be confused on identifying trends. We're going to talk about the London patterns, how to build an edge using these London patterns. We're going to back test, right? Create a trading plan, talk about trading psychology, and then sum it up all up on week 12, right? We're going to have two live sessions per week. So if you're interested in joining, make sure to click the link in the description below, the top link in the description below, and I'll see you guys inside. All right, take care.